11.63% return in 2025. That was Arvocap Eurofix Fixed Income Special Fund. Now, we want to understand what this fund is, and Vicky is here to explain that. Right, Vicky, this Eurofix fund, we rarely hear about it. Many people don't understand about it, and the return here are quite mesmerizing, 11.63%, and that is a USD fund. Tell us, what is this fund about? Where do they invest their money? Yeah.
Okay, thank you for the question. So the Arvocap Eurofixed Special Fund is a special fund, so which means it invests in offshore assets. So it's a fixed income fund which majorly invests in Eurobonds. So these are bonds which are in other currency, maybe for Kenya other than case, maybe they are in USD or they are in the Euro or the GBP. And
Eurobonds are not bonds in Europe, eh?
No, they are bonds issued by a country, but in a currency which is not theirs. So which means even, for example, Ghana can issue Eurobonds, not in Sendi, but maybe in USD. The same thing with Nigeria, a Eurobond where it's not in Naira, but it's in another currency. Mostly it is developed markets currencies. And now it's invests in the sovereign debt, of course, which now it's also Eurobonds, both locally and globally, and also invest in corporate bonds. So corporate bonds are normal bonds, but now they are issued by corporations or companies. For example, what we saw last year when Safaricom issued a corporate bond, for a green bond, to enhance their solar infrastructure. The same thing we also saw with EABL, issuing a corporate bond to finance some of their debts. So that's what we call a corporate bond. So this fund majorly invests in those two categories, corporate bonds and sovereign debt or Eurobonds. And also it can also do structured products in the area of fixed income, but that's like a 5% of the allocation. In terms of minimum investment, it's a USD fund, so the minimum investment is 1,000 USD. The same thing with the minimum top-up is 1,000 USD. Locking period is 6 months. And as you've heard, our performance has been quite good to the dollar. The 11.60 to the dollar is quite a good performance.
Yeah, that's quite impressive. That's quite impressive. So now, this Euro fund, you can invest in Kenya, you can invest in Africa, you can globally, right?
Yes.
All right. How do you go about picking this is the best Eurobond to invest? Let's leave that one. How do you pick your portfolio so that you can be able to give us such a good return?
So for all our funds, we have number one, this active management strategy. So every time we are on the markets, looking at the opportunities which are there, how are the market shades, how are these shades affecting different markets in terms of the sovereigns and even these companies. Now, for example, if I could give again an example of emerging markets, which emerging markets is the second class after developed markets. And in the projections for the World Bank in 2026, the growth in those markets is expected to be around 3.9%. So which means this could attract foreign inflows into their sovereign debt. So if we see such a scenario, it means that the emerging markets are ripe for investment. So we can take some of these sovereign debts in those countries. Again, looking even at the developed markets in terms of corporate bonds now, we've been hearing about artificial intelligence. So what that means is companies are sourcing funds to maybe finance their infrastructure around artificial intelligence. And that means now, depending on the maybe level of productivity of the company and level of even the management and everything, we assess these companies to find investment opportunities. So that's a space in AI, corporate bonds around the AI space. And again, in these defensive areas like your healthcare, utilities, where we are sure we're getting companies which are of high value, if I might call it, of high value. Because what I'm saying in terms of high value is, let's say a company is in healthcare and it's issuing a corporate bond to finance their maybe acquisitions in the healthcare. But we also have these ratings where like Fitch and S&P rates these companies. So we also look at their ratings. Where are they lying? So we usually have two classes. There's the investment grade and the high yield. So you are likely to go into the investment grade because these are stable companies with high value and likelihood of giving even good coupons.
Wow.
And stable coupons.
That's a good one. That's a good one. Guys, that is where we are giving them this money. We are giving and trusting them. Professionally managed, they understand the market, they know what boat to pick, what to leave. Now, these equity funds, these fixed income funds, who is it? Who is the ideal candidate for an Eurobond? An Eurofix, this fund. Who is the ideal candidate?
So again, just like Almasi, these are fixed income funds. But now these ones are in the Eurobonds, which are in the other currencies. So which means in terms of risk, it's slightly higher compared to Almasi. But now this is a fund which you can use for your capital accumulation goals and even income goal of getting some income out of it. So the ideal client is someone who is looking for accumulation, someone who is looking for high returns. Yeah, this is the ideal fund.
Perfect. So it's a long-term investment fund that you can add into your portfolio. When you're talking about fixed income funds, which ideally they're investing in bonds that are low-risk investment, it means you're going to experience a good growth at the same time preserving your capital. So quite good for long-term goal. And ideally, fixed income funds like Arvocap, Almasi, and these Eurofix, they remove the stress of you going into the market to buy the bonds, right? Yes. If you don't like that hassle, just give Arvocap asset managers your money. They can take care of that, and they're going to give you a good return. All right, thank you. So you need 1,000 USD to invest in this fund, and ideally you're going to achieve your long-term objectives. Last one, how is the market outlook? It will probably 2026 be a year of 9% or 15%. How good will it be?
Okay, so for 2026, if I could start locally, because of course we also invest in Eurobonds, Kenyan Eurobonds. Looking at the market for Kenya, I think the next Eurobond maturity we have is in 2028, around 1 billion. So which means in terms of this pressure, which even comes to the government in terms of borrowing, seeing this fluctuation of interest rates is not there. Maybe locally, if I could give an example in terms of tax collection for the half year for the fiscal year 2025-2026, they missed the target a bit by 152 billion. So that means maybe they may go to the local markets to get the extra, to cover the extra gap.
Yeah.
But again, with what I've said about emerging markets in terms of economic growth looking positive, this is going to stabilize the interest rates. Even with the pressure of the elections, with these growth outlooks and the government not have much of obligation, I think even for February they have around 22 billion, which is not quite much, and 163 in March in terms of obligation. So they're not pressured for. So what that means is the interest rates will keep being stable. And that means stability for our funds. Even looking in the other markets, in the emerging markets, apart from these geopolitical issues we are seeing, which are majorly in the West, the emerging markets growth outlook is looking good. And even recovery in terms of the African markets after the COVID issues we saw is looking good. So that means even the countries who were defaulted, those who are near defaulting, they are taking care of that and doing fiscal consolidation. So that means stability for the sovereign debt. So that's bullish for our fund. Looking at the corporate side of things, we are talking about defense now. Just to say, in the escalation in Europe, and US. So that means in these areas, we are going to see lots of opportunities in terms of companies we can invest in corporate bonds. The same things with the AI. Now we are in the cycle of integration after seeing lots of data centers last year. So companies will be raising funds for that space. Looking at health sector, the same thing, AI coming into the health sector, energy. So I think there are lots of pockets of opportunities for Eurofix funds, both in the sovereign debt and in the corporate debt. And again, for us, we do that active trading, which means even for these bonds, we'll buy when we see the opportunity. And when we see the opportunity for selling, we take the opportunity. Same with corporate bonds. We have this checking the market every now and then, and ensuring we are at par with the trades so that we can give the clients the best returns.
Wow, amazing. So we are encouraged that if we invest in these funds, we don't expect a slump, but your positive outlook is giving us hope that our money is going to grow and not decline.
Yes.
So that's it. Thank you so much for taking us through these two funds, the Arvocap Massive Fund and Eurofix Fixed Income Fund.
Thank you
All
so
right,
much.
thank you.